Imagine waking up to discover your investments have suddenly skyrocketed. That's precisely what happened to shareholders of Australia's Qube Holdings after Macquarie Group made a bold move, a proposed $7.5 billion takeover deal. Shares of Qube Holdings saw a dramatic surge, jumping a staggering 20% almost overnight. But what's behind this massive offer? And what does it mean for the future of this logistics giant? Qube Holdings officially announced on Monday that Macquarie Asset Management had presented a non-binding proposal to acquire the entire logistics company. The offer values Qube at a whopping 11.6 billion Australian dollars, which translates to approximately $7.49 billion in US dollars. To put it in perspective, that's like acquiring a fleet of thousands of cargo ships or building a brand new, state-of-the-art port facility. Specifically, Macquarie is offering $5.20 in cash for each Qube share. And this is the part most people miss. This represents a nearly 28% premium over Qube's closing price of $4.07 from the previous Friday. A premium, in this context, means Macquarie is willing to pay significantly more than the stock's current market value, signaling their confidence in Qube's future potential. This substantial premium is what fueled the initial nearly 20% surge in Qube's share price to $4.87 during early trading on Monday. The takeover bid wasn't entirely out of the blue. Qube revealed that it followed a period of negotiations stemming from an earlier, unsolicited offer from Macquarie Asset Management. While the specific value of that initial offer remains undisclosed, it's clear that Macquarie was already deeply interested in acquiring Qube. But here's where it gets controversial. Some analysts speculate the initial offer was intentionally low to test the waters, a common tactic in corporate acquisitions. To truly understand the magnitude of this deal, consider the enterprise value. The proposed 11.6 billion Australian dollar enterprise value represents approximately 14.4 times Qube's EBITDA, earnings before interest, taxes, depreciation, and amortization for the financial year 2025. Enterprise value is a comprehensive measure of a company's total worth. Think of it as the total cost to buy the entire company, including not only the stock price, market capitalization, but also the cost of paying off all its debts minus any cash the company has on hand. It gives a clearer picture of the actual investment required. This multiple of 14.4 suggests that Macquarie sees significant long-term profitability in Qube's operations. So what exactly does Qube do? Qube's core business revolves around logistics, encompassing a wide range of services. This includes container leasing. Think of those giant metal boxes you see on ships and trucks, operating cargo terminals for cars and grain, and providing road and rail transport services to move goods across Australia. They are a critical link in the supply chain for various industries. Of course, such a massive deal isn't a done deal yet. Several conditions need to be met before Macquarie can officially take over Qube. These conditions include a satisfactory completion of due diligence, which means Macquarie needs to thoroughly examine Qube's financial records and operations to ensure everything is as it seems. The deal also requires final approval from the boards of directors of both companies and, crucially, regulatory approvals from government bodies that oversee mergers and acquisitions to prevent monopolies and ensure fair competition. Qube Chairman John Bevan acknowledged the proposal, stating, "The proposal from Macquarie Asset Management is a reflection of the strength of Qube's business model and our assets, and the quality of our people and culture. We look forward to continuing to engage constructively in the best interests of our shareholders." This statement suggests that Qube is open to the acquisition, provided it benefits its shareholders. Does this takeover represent a positive development for the Australian logistics industry? Will Macquarie's ownership lead to innovation and growth, or could it stifle competition? What are your thoughts on this proposed acquisition? Do you think the 28% premium is fair, or is Qube worth even more? Share your opinions in the comments below.